By the way, when I said gave them a quick hint, I said, who am I? Who's the secret guest? And they guessed it within seconds. I mean, Daniel guessed it literally within seconds. Let me just give you the stage for 30 seconds to introduce yourself.
Yeah. So, hey everyone, happy Friday. It's been a crazy one in the stock market for sure. My name is Justin O. I am a kind of long-time Wall Street guy from New York City. Well, originally from California, but working in New York City, former investment banker, then moved on to kind of a few different multi-billion-dollar hedge funds, probably one of which you would have heard of, and been serving as kind of a technology CFO for the past few years. Really kind of started doing videos on TikTok and social media, and just, I don't know, now it just snowballed into me being on YouTube. So just really happy to be on. Been doing a lot of analysis. I have my own channel, A Couple Cents on YouTube.
We got it on the screen right now. People can.
Yeah, so if you just go to, oh, sorry, go ahead.
No, we got it on the screen. Just go and subscribe right now.
Yeah, definitely. And just check me out. Do live streams every Thursday night. I've been doing that for almost a year now. And then also have a website, acouplescents.com. And so we post like some premium analysis, and then I manage a paper portfolio as well for the community there. So thank you so much for being here. I appreciate just the time, and especially during a crazy day like this, Tom.
Yeah, and I want to show people your channel. I don't know how to. Technically, I'm figuring it out. By the way, shout out to the 1,500 people in the stream right now. So Justin, I wanted to show you channel. Oh, I figured out how to do it. Okay, so share screen. This is how we do it. So I was telling to the people on stream right now that you have what I would define as my favorite channel on the platform right now.
Wow, that's high praise. Thank you.
A Couple Cents. By the way, I'm not even, look, we were talking about it. I didn't even know I'm not subscribed to your channel, but I get I see your videos on my home feed every freaking day because the algorithm knows I keep watching. So that's, you remember our offline conversation about subscriberships? I mean, jack shit.
Yeah, it's all about views, and you are a view king.
No, but here's the thing. If the algorithm knows that I want to see your content, it pays no attention if I didn't even know I was not subscribed. Let me change that.
Oh, well, thank you, Tom.
This thing also is meaningless as well. I mean, I can click all, but if I don't watch your channel consistently, it's not going to let me know. At some point, it's going to drop me off of your channel.
Anyways, powerful algorithm.
So my audience loves my DCFs, my fundamental analysis, me going through the financials, actual deep value fundamentals, long-term investing analysis. And I'm kind of blown away by your work. I mean, I've seen you do, I've seen your DCF on Airbnb, which was phenomenal.
Thank you.
I mean, your stuff are next level shit. I mean, if you guys want to see real Wall Street level DCF live in speed runs, I've never seen. I mean, it's really fast. I mean, you want to talk about fast quality DCFs? I mean, I love your stuff a lot, so I'm a huge fan. I think you're gonna hit 100,000 quite quickly. But you need a new banner.
I do. See, I like, I'm still tech CFO. I do this by night and on my nights and weekends, and I try my very best, but some things do suffer, including, graphic design by little old me,
Okay, so listen, Justin, we gotta get into this, into the big question. What the hell is going on with the market?
Yeah, so I wrote a full report on my website, but just to kind of give you the bullet points, right? Something that I did a live stream on my channel on December 10th. I did a little retrospective, and I called out how the stock market was looking a little bit frothy, and we are fun. You and I are very similar, Tom. And actually, it's funny because there's a whole thing on Brian Jung's channel where some people were calling out you and me as like one of the only fundamental individual value investors on YouTube.
It was so cringe though.
Yeah. Anyway,
I saw your face while this was happening. You were literally moving uncomfortably. I saw you like, oh shit.
Anyway, but I mean, so like you and I aren't going to be the best, right? Like in terms of macro analysis. And I would argue macro analysts have a much harder time, right? You can have a genius PhD, Nobel Prize laureate on one side and the same thing on the other, and they're going to be wrong all the time just because economics is so right. Like, no, you don't predict the coronavirus pandemic, so you can't really predict macroeconomic trends. But it's good to be apprised. So what I was doing in early December, I was like, okay, rates are really low. We're printing a lot of money. Everybody's afraid of CPI inflation. But I didn't think it was going to be CPI inflation. What I thought was happening was we're seeing basically inflation in financial assets, and the power of certain, stimulus checks and consumer spending habits, sitting at home, the Robinhood trend, all that stuff, basically pushing growth stocks. And it's not just growth tech; it's all stocks that are very well recognizable to the consumer. So you weren't seeing the big valuations from high growth stocks that nobody would have ever heard about. Well, most of them people uncovered, but it's mostly like even some stocks that were just well known are the ones really getting hyped up. So in early December, I was basically saying the yield curve is extremely, extremely flat, right? And I did this graph on the yield curve, and basically, as you know, as I'm sure you're everyone on this channel who's been watching Tom for any amount of time knows, the way we do discounted cash flow models is we apply a discount rate over to the cash flows that we project into the future, right? So the value, the fundamental intrinsic value of a company is the discounted cash flows in the future, discounted back to present value. The one thing that I will say, as us DCFers don't do correctly, is we generally apply some relatively conservative, we talked about that too, Tom, conservative discount rate to the cash flows going forward. But in reality, it's probably more like a different discount rate per year, right? Because the 10-year, it's very, very, I think it depends on the steepness of the curve. So if the yield curve, so meaning your sub 1 year treasuries, and then your 10-year treasury, then your 20 and your 30 is steeper, that should somehow flow through the discounted cash flow model as well. So what we had, right, because of Jay Powell and his bazookas and this unprecedented event, is you have a super flat yield curve, because he just basically said, we're gonna stimmy up the world. I mean, the Fed, Mnuchin did, right, and Congress, and he was saying we're gonna go. He's like the ultra dove, right, just like Yellen, ultra dove, keeping rates low, keep printing money, QE, quantitative easing, and we're gonna do that forever. And there's no end in sight to that. So the yield curve clearly went down. Rates went to near zero. We all refinanced our houses, right? I mean, a lot of people on this channel probably did. And the yield curve went down. So therefore, the things that go up the most in value in that environment is growth tech stocks, in which have very little cash flows in the early years, but have big promises for years 7, 10, 20, 30.
Exactly.
And so that pushed. So I call that out. That would have been too early to sell out of growth stocks, clearly, because we went very high from December 10th to February 19th, which was the peak on our portfolio. But I started slowly rotating us into value stocks because of that. And I lost a little bit of my discipline there because I got excited about a couple ones, but like, as we all do, right? We're humans, right? Like you can never call a top and you can never really call a bottom, right? Nobody can. But anyway, yields are right. So what's happening now is, I think the narrative is like, right, you'll go on Twitter and people are saying, oh, well, if it's good news, it's bad for the market because that means interest rates are going up. So let's just try to like dig into that a little bit. So interest rates, people think that because we're going to have a super strong recovery, vaccinations are, you can share your screen, but like lowering the case counts across the country, and I haven't looked at the global numbers very aggressively, and we are not even, what I think the figures I saw out of an equity research report was about 17% vaccinated for at least the first shot, and it's already doing wonders for cases, not yet deaths, but cases. Everyone's bullish that it's going to be this pent up demand. The U.S. savings rate is like 25%, peaked at 35%, but we're still well over normalized savings rate. So Americans have a lot of cash. They have a lot of dry powder. They've gained maybe a couple pounds because they've been stuck inside. They haven't been able to go out and do what they usually can do, they want to do. And so they have all this money. Plus, we just pumped another 1.9, we're pumping another $1.9 trillion into their bank accounts too, and into small business bank accounts as well. So you have extra money printing, you have a dovish Fed and a dovish central bank policy, along with a roaring back consumer with a lot of cash. That will drive up just insane amounts of demand over 2021, which will increase prices, right? The more demand you have for products, and a lag in the increase in supply equals a sharp tick up and drive up in pricing, which is inflation in some sense or another. And if the Fed, so people are saying that's going to happen. So we're going to see inflation in pricing. So we should expect yields to go up. But then the question is, that's not the messaging we're getting out of the Fed. And Jay Powell came out about a day ago, right? And said, was super wishy-washy about it. So the Fed has been saying, we're not going to raise rates until we see both inflation over 2% and unemployment full employment. And we're well off from that, right? We're still like high single digits, low double digits, right? Depending on, and you can break down by racial demographics in the US. And what's going to happen is inflation might happen, but full employment might not happen. So if that's the case, the Fed is either going to have to do a 180 to fight inflation by raising interest rates and becoming more hawkish, which will drive up interest rates and keep that growth sell-off going, meaning rotation into value. But right now we're seeing selling almost across the board. I mean, I know financials are doing pretty well, but they're being really stable. It's not like they're spiking up. And some of them are grinding higher. Or they can just be stubborn and not fight it, and we might have runaway inflation. So we don't know, because there was inflation talks back in 2008. But if you pull up the Fed funds rate over the last 5 decades, we're at the end of the line, right? We've been doing this Keynesian loop downwards to zero interest rates for a long time. And, and I watch a lot of Real Vision on YouTube. There's a lot of macroeconomists out there that are going to be better than me at that. But they're basically, like, a lot of people are saying, oh, what Japan does, Europe follows, and then the US follows afterwards. I think this Keynesian economic Jenga game that we play works because we are the reserve currency. Now, then you bring in the whole Bitcoin conversation or the Chinese digital RMB. Like, are we going to have a bifurcated, separated, reserve currency scheme in the future? Like, are we losing control? And so I think there could be a scenario where this is just the start of a pretty big crash, especially in growth stocks. And what I did say, I think back in December, but I definitely said in January, I said, if the yield curve steepens, Cathie Wood's going to get wrecked. And no shade at Cathie Wood, but I said,
how dare you? Blasphemy.
I mean, but like, yeah, you know it, right, Tom? Like, what is she in? She's in all these stocks that have zero revenue now. Or, I mean, I'm overgeneralizing, right? Because Tesla has cash flows now, but zero cash flows now, and are promising cash flows in year 10. So okay. So there's a lot to unpack there. Here's the problem with having you on the show. We might as well change this to the Echo Chamber podcast, because I don't know if you watch my videos. I assume you watch every single one. I watch a lot. You put out a lot of content.
Yeah, but it's impossible to keep up with everything. But basically, okay. So here's what I've been saying. So about a year ago, when I was still doing this part-time, I made a video responding to Graham Stephan. And I was still irrelevant then. And basically, my premise was, dude, stonks don't always go up. He was basically saying, oh, you've been warning us from a crash from 2015. This was like 2019, right? Blah, blah, blah. And basically, dude, stonks don't always go up. You're a millennial. You just don't understand what 2008 looks like. You just kind of felt it, but you really don't know what a real crash looked like, the dot-com crash. You probably have a better understanding. I mean, you're up there in the age, so you know the shit. I mean, and basically people are saying, well, you're a fear-mongering clickbaiter, blah, blah, blah. So people, even 3 months ago, people were commenting, that video didn't age well. And now that video is going crazy. So moving on. So about 6 months ago or 5 months ago, I essentially made a video and said, hey, dudes, check this out. Unemployment rates going up. Inflation is inevitably going up no matter what the numbers are saying, because there's so much printing of money. market cap to GDP is record breaking high. What we have here is a powder keg about to fucking explode. I mean, there's no two ways about it. It's just it's illogical not to assume that this thing is going to blow up with these parameters, right? So, but the only thing I said in that video, I said I don't know when. I mean, the only question is how long can the Fed chase the market with these low interest rates and keep printing money? Anyways, long story short, I made a few more videos basically saying, hey, I made one literally on February 15th saying, hey, this is getting frothy, be careful. And people like, oh, you're fear mongering. So even now I get comments, this is just a small pullback. I don't know if it's just a small, honestly don't know. Okay. Nobody knows. So anyways, so I don't know if you watched the Jerome Powell goes on TV and he's basically, well, I can imagine the conversation. Well, this is horrible. Let me get on TV and fucking rescue everybody. Let me go on TV and just save everybody. He goes on TV, says everything he needed to say, and everything crashes even worse. So I don't know if they were telling him while he was talking, but every second he was on air was crashing the market even worse. He was like, listen to me. We're still not there. We're not raising interest. It's impossible. We can't raise interest when there's so much unemployment. We got to have more growth. And he was making sense, and yet nobody was believing this man. The longer he stayed on there, everybody thought he was BSing.
Yeah, and so the question I have is what happens when prices start rising aggressively? Maybe they do, or maybe we just actually normalize around 2.5%, and it takes a while for unemployment to improve, but prices start bumping up to 3-4%. What do you do then? Like your hand is forced.
Interest. He has to raise. It has no choice. I mean, otherwise, inflation numbers are like a nuclear reactor. If you don't control it before it goes out of hand, you can't just pump the brakes when it's already out of control. It's like a pandemic. It goes out of control very fast. So he'll have to pull the trigger. And I said in my video, I said, hey, JP at some point will have no choice but to raise interest rates. Again, don't know when, but hey, check this out. Inflation, and I said in my videos, doesn't just happen overnight. You don't just wake up one day, you go get a Big Mac, right? You said it, right? And the Big Mac is twice as expensive. No, you said it. It starts with the stock market. It starts with the semiconductors. It starts with the raw materials, and then it slowly trickles down. Like, try to get the fucking graphics accelerator right now. Impossible. I mean, a lot of commodities. So basically, I'm saying I'm completely agreeing with you. But here's a question back to you, as my resident expert on the stock market and economics. When the hell does this pullback end? It's the question everybody wants answers to, and nobody really knows what. And of course, you're not clairvoyant, but your best analytical answer.
I don't think we're done. I think it's really hard for me to say, because like my view is it depends on what the Fed does and what inflation does, and I'm not a predictor of either one of those things. But I don't think we're done, because I think the market is telling us, and I actually do think that there's a potential that we've lost control. Now, and at the end of the day, right, what is the, if I just kind of look at the yield curve right now for today, just give me 1 second. If I look at the yield curve for today, like the daily treasury rates, so what did we hit today? We hit 1.54 on the 10-year. Now, most people are thinking that 10-year's natural rate as of today should sit at 2 to 2.5%. That's like a natural rate. Now, I think that if nothing happens, we're not done yet, because we still have some time to go for the 10-year treasury to hit 2.5%. I think yields still need to come up, or we've only done half of the move that we should have. But there's a piece of this where Jerome Powell may come out and say, we're going to do aggressive yield curve control. And so we're going to start selling near-term treasuries and start buying the heck out of 10-year plus treasuries. And so when that happens, right, the aggressive buying with their money that comes from thin air, lowers the yield curve on the back end, lowers rates again, or keeps it lower artificially, but also prints a bunch of money, which might actually exacerbate the longer term problem. I would hope we don't do that. I'm a free market kind of guy with, I think that, man, I like, if you just go to like the St. Louis Fed, effective Fed funds, just Google Fed funds rate, and it's like the fifth one down. If you can do me a huge favor, it's like, I think very helpful to look out for this. I mean, there's a chance that we're in unprecedented times. You and I were investing back in 2008, right? And you were alluding to, a lot of people on the internet now weren't. And that was the first time we ever hit zero. And yeah, and then but now we're like, finally we were able to taper rates starting in 2016, 17, 18, 19, and the coronavirus shock happens. You can never predict economic shocks. And okay, well, maybe this whole thing works for one more cycle and we go up again. Who knows? I do think that stocks don't particularly look like it's a crazy bubble in aggregate, but this market is the lumpiest and most, I would say, self-contradictory market I've ever seen. And I haven't really been a stock market historian, but it does seem like it's been, the only other time it's been this confusing has been in 1984. And right, so I think we have extreme overvaluation in some stocks, in some kind of early to market, zero revenue. The management comes out and says, oh, we're building a car. I mean, you guys can fill in the ticker. We're building a car. We expect this much in revenue in 2025. We don't even have a factory yet. Buy our stock, $10 billion valuation, right? I mean, I started my YouTube channel with warning people against Nikola. I think I covered it early at like $30 a share, 35 bucks a share.
You're trying to steal my Nikola cloud? How dare you?
No, I actually didn't.
I'm kidding.
No, I mean, but two rational heads saw it. So I would say,
I'm just kidding.
Well, I mean,
I enjoy the label of the Nikola exposer.
we looked the fool, right, for a little bit, but I mean, until 90, and then it obviously is lower now. I mean, it's not just Nikola, right? It's like any company that doesn't have any revenue, that won't have any revenue in 2025. So like, what's the point? So if as an investor, I have a required investment rate of 15% a year or 10% a year, like I actually, if you, the inverse of, the reverse of compound interest means that even if it's $1 billion in year 15, that's worth so much less today, right? So especially the further and further out you get. So there's a reason why, most hedge funds generally run 10-year DCFs and not 20-year DCFs, is because at a certain point, compounding is so powerful that year 20, like whatever it is in year 20, the changes to present value are so small. I'm going on a diatribe here, but basically, I think that like my base case, which is a very low conviction base case, is we go down more. We go down to where we level off in interest rates at the 10-year at like 2.5%. I don't know what that translates to the stock market. I think the stocks that during that leg down, the continuation of leg down, that do the best, may not be good, but at least hold value, are probably the ones like, like the value ones, the cyclicals, the return from home trade. I mean, you're seeing it in the market right now. The things that are selling off like crazy are the perceived stay-at-home ones. Like one of my favorite stocks, as you know, Tom, is like Peloton. Misunderstood. Yeah, both of us, right? And it's labeled as a stay-at-home one, so it's been selling off like crazy, discount pricing now, regardless of what it is, because we're in macro waves, and you and I are like boat dealers, right? Like at a certain point, stay out of the water, or like protect yourself because in the port, because right now there are big macroeconomic waves happening that maybe we can get some stuff at a discount because it's unfairly labeled a stay-at-home stock when everybody's like buying, I don't know, airlines or whatever, right? Financials might actually do well. But I think tech probably sells off more, or maybe not tech, right? Like, cause I'm in we loved Facebook from the very beginning, and we've looked like, oh, that's stagnant, it's boring, but look how Facebook does in a market like this, much, much better. Right. So I would just say, like, I think if my base case is there's still a leg down, but it's not some like 50% drawdown, like 2000.
Yeah.
It's probably another 10% down,
Easy. Maybe
and
more.
which will hurt way worse, right? For
Maybe
growth
more.
stocks,
Maybe more.
right?
Yeah.
But then I think there's the downside case to that is we get runaway inflation. The Fed is stubborn, doesn't address it, and then starts doing yield curve control. And
Yeah.
then they print money, 1.5 trillion plus another one. And then, right. And then you're in this, like, is the US dollar might lose its seat. And then in that case, I like Bitcoin as right. I mean, you can be the Chamath like thesis, like schmuck insurance, or I believe it can be a viable third party independent, maybe not reserve currency, but a big asset class for a hedge
Okay,
long
so
term.
we have to talk about Bitcoin now. A lot of our viewers don't know, but I've been stealing a lot of content ideas from you.
It's all good.
No, we'll talk about it. I stole a lot of ideas from you about Bitcoin, because I needed somebody smart to tell me what the hell is going on with Bitcoin. So I'm not gonna lie, it's like Michael Richards admitting that he stole from Woody Allen.
But
Both
see, the
schmucks.
thing is, you being in Bitcoin helps me, and I don't believe in stealing. Like, these are ideas. We're in a free speech
Okay,
environment.
hold on,
right?
hold on. We'll talk about the second. I want to pause a little bit just to pay some respects. People donated some money. So first of all, P. Petal says super chatting because I've made $100,000 on Nikola puts, 65 strike. Thanks to Tom. I appreciate it. I wasn't the only one, as you just noticed. But yeah, Hindenburg also did a great job about that. And John says, "What's up, Tom?" And I'm here post Steven's podcast. Important live stream. Okay, sure. No problem. It's a little bit, it caught me off guard a little bit. So, okay. One more. Oh, this is a great set. That's the Warren Buffett one. Yeah, I love that one. I love that one. It is eternally true. It's true in 2022 and in 21, 22. It will always be true, bro. Always. So I won't lie to you. I almost am tempted to dip into my non-stock market money because there's so much good stocks right now out there. Because think about it this way, Justin. What's the only thing that really changed over the past few weeks, or a couple of weeks? It's just 2 weeks, right? The only thing that's changed is bond yields, which will have to come down. They will have to. It's not sustainable at this rate. Okay, I'm not a bonds guy, but tell
But
me
you
if
think yields are coming down or the prices are coming down?
Well, they're correlated.
Well, yeah. No, I was just being, so you think yields are gonna go down?
Prices will go up, yields will go down.
So you think yields are going down from here?
Yes, I'll tell you why. Okay, think about it this way: it's a free market, so you have a free supply and demand. At some point, this yield actually makes sense for me to invest. I mean, you're giving me a zero risk, 3% or 2.5%. I might take it. I mean, who knows? I mean, you'll make 3% on fucking rentals these days in certain parts of the world, right? So at some point, it becomes so attractive with how little risk they have with T-bonds, right? It's literally no risk. So at some point, the demand is going to have to increase at these rates. It's going to push the yields down. That's just how it's like the NBA draft. The shitty teams get better draft picks. It's a merry-go-round. It's just how the market works. And so I firmly believe that yields will have to come down. It's just forces of market. The problem where I think where we're seeing the tech sell-off and a lot of misunderstanding. So everybody's now just setting anything that has the word tech in it, even though companies like Apple have nothing to do with the increasing interest rates. They're making money
it's a
today.
cash flow company.
It's a cash flow company. I'm like looking at this. Okay, I guess I'm buying more Apple then. I mean,
Probably a good time, yeah.
Dude, they are not included in this category, and people selling everything that they perceive as tech. So the reason people are selling tech is, you mentioned, right? We're both kind of the DCF guys of YouTube. I mean, right? So the first concept of a DCF, right, is your discount rate is basically a derivative of interest rates. If you anticipate year 2, year 3, year 5 interest rates to go up, right, your DCF changes dramatically. Just a 1% of discount change has a massive effect on the share price. So people are factoring that into their year 2, year 3, year 4, year 5, and they're seeing lower valuations. However, here's the thing. If you were doing conservative DCFs, meaning like we did, a 10% kind of flat rate, while this whole zero rate interest were part of our life for the past 6-8 months, we're still above the current, I mean, we're still above the interest rates in our DCF, so our valuations still hold true even if interest rates go up. That's why I'm saying, well, I don't care if they raise the interest rates. I overshot my DCF discount rate anyways, just for that specific purpose. But I want to ask you about Bitcoin. But hold on, just 1 second. There's some crazy people in the chat. Jesus Christ! Hey, don't donate so much. This is too much money. That's like, let's do $1 or $5 donation. Somebody donated $50. Keep your
Wow.
money, boys. Keep your money, boys. I appreciate it a lot. Thank you, Wes. I appreciate it, but it's too much. Finally, an afternoon live stream. I've been waiting for this one. Keep up the great work. Appreciate it, but keep it just to small donations. Don't go crazy, guys. This is way too much money. So Justin, I know you know about cryptocurrency probably way more than the average analyst. Definitely more than me. I'm not a cryptocurrency guy at all. So I'd love to hear your opinion on two things. Kind of a general question about the future of cryptocurrencies, which I know you spoke about before. I watched in the videos, and also cryptocurrencies and specifically Bitcoin as a hedge against a pullback, be inflation, and versus metals, versus gold, versus stuff like that. So what? So the floor is yours.
Yeah, for sure. So just for those of you who are been with Tom but not me, I got bit by the Bitcoin bug truly in 2016, but I actually bought my first Bitcoin in 2013 at $300, and been buying, 2016 to 2017 bubble, and then got my real conviction through and after this 2017 bubble. So yeah, like I've, again, I bought at much lower prices than this, and I'm still buying even at 48,000 per Bitcoin, because long term, I think the thesis is very fundamental for me. And, especially like Tom probably knows this as well. It's like, once you get to a big enough asset like amount for your own personal wealth, right? Like you can't just put it all into tech stocks, right? And you can't put it all into real estate. And well, that's worked out for a lot of influencers and a lot of people for the past 3 decades. Anybody who's even on the internet, because we've been in a decreasing interest rate environment. And that's a whole thing, right? And I love real estate. Like, me and my friends have bought lots of property here in Nashville, Tennessee. Saw the birth of the second city, so we have some of our assets in that. But Bitcoin to me is a really, really interesting one, right? So the thought is, especially, it's really hard because I'm trying to convince someone who is of the caliber of who my professional colleagues, right? And you're talking about private equity, hedge fund guys who are, either, have been even more senior than me, and they don't own a single Bitcoin. They think it's, where are the cash flows? Well, sometimes you have to be more curious as sometimes a macro guy. And so I've always been a very early adopter of technology. We spoke offline about how I bought Google as a middle schooler, as IPO. When I got my hands on I had a rich friend who got an early edition of the iPhone. And when that came out, I was like, oh, buying a bunch of Apple, like, hey, we're going to buy a bunch of Apple. Same thing with Amazon. I believe that there's a physical world and there's a virtual world, and the internet, the world of the internet, right? And so if you believe that the physical world has the best immutable intrinsic value currency, which was gold for 5,000 plus maybe 10,000 years, right? I mean, there's a lot of reasons why gold was its thing. Like, there's a lot of books on this. So just like some of the top 5 books on Amazon, just go Google Amazon, some of these. But the physical world has gold. It's hard. The inflation rate's really hard because you can't find it. We only pull out about 1.5% to 2% of all the gold supply every single year. You can't like find it unless and we go mine some meteors. It's very easily. It doesn't rot. It's immutable. There's a lot of things, right? But now we're building out this virtual world, and if you think that there should be an immutable, secure, anti-inflationary, artificial, no money, like anti-money printing type of asset that should backstop and be the core and spine of collateral on the internet, that's Bitcoin. It was the first one ever to solve the there's a bunch of like cryptographic problems that it solved, and it actually invented blockchain, right? And so the reason why we use gold is, one, because the stock to flow is so low, but two, or so high. I'm sorry. So the flow, so the amount of new gold we found over hundreds and thousands of years is so low. But it's also because it's so rare, and it was the first one we found, right? It just happened to be the first one we started rallying around. I mean, the U.S. dollar was backed by gold up until the 1960s, right? Or 70s, 60s with Nixon, right? So us being on fiat currency is actually a new regime and paradigm in and of itself. So all that to say is, if you believe that there's going to be a virtually native currency, a virtually native gold-like asset, then I believe Bitcoin is it, because it is the gold of the internet. It invented blockchain. It has many internet years, right? Like one internet year is 100.
Somebody said 1979, 1971.
1971. So it's on the border. Okay, thank you. Again, I'm not the biggest historian, but I definitely use that to apply.
Yeah, me neither.
Going forward, but right then. Now you're saying, okay, so how much is a digital? I mean, there's a lot of advantages Bitcoin holds over gold bullion, and I don't hate gold bullion. I think it's a great hedge. What happens is, like, if you agree that there should be a virtually native currency, virtually native intrinsic asset and collateral for internet currency that can't be, I guess, inflated away by some government or company, right? Like even companies like Microsoft try to do eCash, but the thing is, like, nobody's going to trust eCash. Nobody trades World of Warcraft gold and silver, right? If you believe that, then what is that worth? So I believe that we're in a world where the virtual world, I mean, this is some Ready Player One shit, right? Oh, I apologize for pardon my French, but Ready Player One, like,
Dude, I've been cussing since we started streaming.
Okay, good.
We're already demonetized like 45 minutes ago.
Okay, so like I believe that like the internet makes things way more productive and is a viral network, right? And we're talking about the network of money here with Bitcoin on the virtual layer of the world. And then if you believe that, like, what is that worth? So I believe that's worth at least as much as the total market cap of gold, right? And so the total market cap of gold is like $10 trillion. And if you just apply that to Bitcoin, that's over half a $500,000 per Bitcoin. So long term, I think it's got a fundamental macro style, but fundamental thesis that even some value investors can kind of get around, at least as a hedge. Like, this is a asymmetrical risk reward, right? It's either going, if you believe in that thesis, it's either going to 10x or go to zero. I would take that all day in a casino. I don't know about you, right? Second of all, right, if you're saying what's going to happen, like if there's actually an outsized or non-zero possibility of the Fed losing control, the US dollar losing its reserve status, and us moving to the different maybe dispersed types of reserve currencies, then I believe that there's a big chance that, right, the dollar devalues against stuff. So what's the traditional inflation hedge? It's gold bullion, right? But what's a better version of gold for me as a tech-oriented, like innovation-oriented thinker? Like, I would probably say I'm close, even though we've been talking about Cathie Wood and how she's getting, like, she went way too far on the spectrum of innovation. I'm innovation leaning.
Blasphemy.
So, right?
Blasphemy.
No,
I'm just
but
kidding.
I love Cathie Wood. I think she provides a great product. But
Okay, let's put a pause on the discussion second. This is like the Jordan LeBron debate. You know, whenever you say something bad about Michael, you know, Skip Bayless will go blasphemy, or wait,
I love
the other
Cathie
guy.
Wood.
Yeah, I'm in love with her. Come on.
Oh, yeah, we all are.
We all are. But go ahead. I'm sorry. People hate when I interrupt my interviewees. They absolutely go berserk in the chat when I do that. I can't help myself. I'm like the scorpion in that story. You know?
No, I tend to rant anyway. So please
Go ahead.
The last thing they'll put in that is Bitcoin. Let's say I'm a billionaire, right? And I'm a billionaire in Russia, in China, even the US, right? And I'm just kind of like, I want to get out of here. I want to get out of Dodge at some point, right? I can't carry gold bullion on a plane, even a private plane, right?
Exactly.
But I can literally write my private keys down and take $1 billion of value anywhere.
Yeah. And it's non-regulated. It's non-regulated. It's off the grid completely.
Yeah. So what I'm saying, yeah. So like all that to say is, I think if you believe that you want to hedge against the fact that the Fed might have lost control and we are at the end of the line, I got to send you the screenshot, or can I send you I'll send a link in the chat or something in the private chat.
Yeah, and I'll pull it up.
Hold on.
By the way, while you do this, I'm gonna read the $5 question to you, and I know the answer because I watched your video.
Answer
So,
it.
so Alex Cannon is asking, "Hey Justin, general question. That's gonna prove to you I'm watching your videos. Hey Justin, general question: which one of the new digital coins do you like? Will Bitcoin have a real competitor in the future?" So I heard you say on a live stream, on a live stream. So I'm watching your live streams, dude. Live stream say that there's a spectrum of risk, and the further you go from Bitcoin venturing out into these new coins, the more volatility and risk and uncertainty you have. So if you are, it's basically based on your risk aversion. The more risk averse you are, you probably want to stay closer to Bitcoin, Ethereum, maybe even Ripple, God forbid. I mean, not to venture into, I mean, Ripple, I don't know. Yeah, Ripple is like that dodgy part of town. You don't want to go.
Hey, I own some Ripple stock actually. So
But yeah, so that's your answer as far as I remember it from the stream. But I'll let you answer it yourself.
yeah, no, I would say there's but one king. One is gold in the physical world. Then like it's like, oh, would you invest in copper? Would you invest in like silver or platinum or palladium? Like, I don't know, right? There's so much like that could go wrong with those theses, but it's a very simple thesis for Bitcoin. And there is but one Bitcoin. And I went through when I was deciding whether to put a lot of net worth into Bitcoin back in the 2016-17 age. Seems like a long time ago. That's what I wanted to do to show. It was a lot of like the Bitcoin splits, like Bitcoin Cash with the Craig Wright, like all these other stuff, right? But there is but one Bitcoin and it is king. If you go down to like Litecoin or the other types of currencies, why bother, right? It's just a higher beta Bitcoin. So what I would say is if you're thinking about doing the silver to Bitcoin's gold, which is like a Litecoin, or Dogecoin's probably like a copper or something like that to the gold, right? Then like it's just a meme thing, right? Then I would just say do Bitcoin. And this is already a highly volatile asset anyway. Just do Bitcoin. But if you're going to go with any of the like blockchain, smart contract stuff like Ethereum or some of the other ones, like I said one on my live stream, like the NFT ones, I can't buy it in the US. Like then that's less like investing in this thesis right here, even though they're correlated. It's more like investing in pre-revenue VCs. So think of it like investing in altcoins are being built out by companies. They're like the native currencies for some network for the companies. So for example, like I don't like Coinbase's IPO stock, right? It's valuing the company at $100 billion, which is 100 times revenues, right? So why wouldn't I just invest in a bigger exchange, which is Binance, and buy BNB? So like but when you're buying BNB, I don't think of it as buying a higher beta Bitcoin. I think of it as buying into the market cap of Binance, the exchange, as a company, because the crypto world has made their own version of like equity. Instead, it's ICOs. And that's why Ripple's in trouble, because the US is saying, oh, you did an ICO. XRP is actually a security and that you're in trouble with the securities laws. So all I'd say is hopefully that's helpful.
That lawsuit, honestly, I don't see the SEC winning that lawsuit. It's a very hard case to make. If that's the case, then pretty much every ICO, I mean, okay, so okay, we'll get to this question in a second. But basically, the cryptocurrency world has this debate, right? What is crypto? Is it a currency, a security, or a commodity, or like basically, is it gold, is it cash, or is it a stock, so to speak, to keep it simple, right? And the implications on that debate have real tax implications, because the tax implications of what this thing is, what is Bitcoin, are massive. If it's cash, then selling Bitcoin should be tax free. When you exchange cash, it's not a taxable transaction. But if it's a security or a commodity, then every realization has a taxation. Simple concept, right? So whether it's a security or a commodity, it's a whole different debate. I think there's this push pull kind of dynamic between regulators who are dying to regulate this shit, and everybody else was saying, "Keep your hands off my Bitcoin." You know the NRA meme with the my pride for my cold dead hands. And I think over in the course of history, regulators seldom win against what the people actually want from a new tech or a new currency or a new commodity.
Yeah, I think it is a security, but I also think that the government shouldn't be doing what it did. Those rules are from 1920 something, right? A lot of those securities laws are from now
You know
coming
why
on.
they're doing this though, Justin? They just want to be able to regulate the shit,
Well, they want to
which
protect the little investor because they don't know anything,
yeah,
right? But
of
now we
course.
have YouTube, and you and I are telling people like this is the
Yeah,
analysis. Hey, like right. But
yeah.
these rules were made in 1920 something before there was even like I don't know like disseminated information.
Bro, when these rules came out, people were advocating. You saw the Elon tweet that horses are better than cars.
When these
You have
rules
to
came out. Seriously?
literally, people were putting ads. Your horses. You saw the Elon tweet? Did you see it?
No, is that actually?
Oh,
He's
I'll
hilarious.
find it. I'll find it while you answer the question on screen.
Okay. No, I
I'm
mean,
gonna.
I would say P. Patil. I can't say any better than this. Blockchains convert digital immunity into economic trust. The longer they live uncompromised, the more value they can hold. I agree with this. I can't say it any better than this, but I will say the reality of it is we are in a winner take most, if not winner take all market. Especially with the internet, it values network effects that are so strong with capable and focused teams that build empires, right? Amazon, right? Don't bet against Amazon, even with the departure,
Yep.
uh, despite unless it gets broken up by regulators, right? So all that to be said is I bet on kings. I don't bet on like the third cousin to the wife of the second nephew.
Yep.
So
Agree.
if I'm betting on this, I'm betting on the king and it's Bitcoin, right? And so what I would say is a lot of people are saying BNB is a threat to crypto centralization. I think, as you know, hopefully you know, I think that on Wall Street, uh, to sound smart amongst your peers, you try to be super dogmatic in the value investing approach.
Hmm.
Uh, and to sound smart in Silicon Valley, you try to sound super dogmatic in those Wall Street guys are stupid. It's all about year 10. It's all about grow at any cost. It's all about cash flows now don't matter, like all that stuff. So, and then people end up being very, very tribal. Similarly, in the crypto world, the tribalism manifests itself around the most pure decentralization possible, right? You got the big Bitcoin maxis
Yep.
versus the Ethereum people. You got people that are like anything that isn't fully decentralized is wrong. Well, Bitcoin has a lot of centralization in the form of the mining capacity, right? Most of it's in China. And a lot very concentrated in certain areas, right? Furthermore, I think teams are better at getting missions done than
Hmm.
distributed teams, right? Ethereum's got its problems; they're slow at, like proof of stake and all this other stuff that they're rolling out, sharding and all that stuff, because they're a distributed team. They're not as focused and organized. If you had Bezos breathing down your neck, that thing will be out next quarter, right?
Yep.
So in reality, BNB, yes, it's centralized, but I think of it more like an internal token. Think of it like Blizzard and World of Warcraft Gold. Think about it like
Wow, you're
this.
such a nerd. I can't believe you use those references.
What can I say? You're either going to love me or hate me.
I love those. Those are two awesome games.
Yeah. So BNB is like World of
Oof.
Warcraft Gold, right?
We just lost 100 viewers in a
Oh, no.
moment's notice. It went from 2100 to 2000 the moment you started talking about video games. Hey, listen. So
So
this is the.
in reality,
Go
I
ahead.
think that there's a place in the world, in the future world, for both centralized stuff and decentralized stuff. The decentralized Bitcoin will be the collateral. It'll be the internet gold in which everyone's like making big transfers between platforms. But if you're on Fortnite, no way in hell is like Fortnite going to be allowing trading in Bitcoin, because first of all, the throughput isn't even good enough. But if I'm in Fortnite, I might trade you a fraction of a Bitcoin for a skin,
Yeah.
and that and it might be denominated in Bitcoin, but in reality, I'm not buying it. I'm not transferring you Bitcoin. I'm transferring you. The Fortnite maker studio, mind blank right now, is Epic Games, right? Is crediting on their database and saying like you almost have a bank a credit account at Fortnite. Or similarly, if a lot of people are so bullish on both decentralization and SoFi and Square and all these other things, if you think the Cash App, like you PayPal, you can't even withdraw your Bitcoin. You're still governed by their central database. So what I'm saying is, if the biggest exchange in the world in Binance denominates their trading fees in the form of BNB, just think of that as like you're using Binance's like internal credit system. And if you don't like it, then you can go to Gemini and pay US cash. But that means that you're just denominating your trading fees in US dollars that are getting artificially inflated.
And you just talked about it. Artificial inflation, constant printing versus growing scarcity as demand. Look at, Kathy just talked about it. If every company starts to hedge with Bitcoin just a little bit, think about the scarcity impact of that. It's going to be massive, massive. But hold on. I want to talk about Tesla. I want to talk about Apple, and I want to talk about Palantir before we sign off. But before that, I got to show you this shit. So this is the ad I was talking to about. This Elon just tweeted it. By the way, JJ, I agree. Italy is the best country in the world. I concur.
I've been there 3 times. It's amazing.
Amazing. So this is from Elon. Elon says horses are even self-driving. That's the tweet. And it's an ad. Before you discard your horse and buy an automobile, it is well to think of the costs. And there's this whole like laundry list why a horse is better. This is like internal combustion engines versus this is the same. Look at
I love the horses are even self-driving.
Yeah. Come and get a new harness instead of a new car. And remember that Dobbin will take you through snow and mud as well as on good roads. And that his carburetor is never out of order. That's a good copywriting.
It's good. Wrong.
It's good. It's good. Okay, so listen, let's talk about some stocks everybody wants to know about. You know what? We can start with the obvious, right? What the hell is going on with Tesla? What's going on with Tesla? What's the future of Tesla? Everybody knows I'm a major Tesla bull, but what's your opinion?
I like certain other companies better. We like Tesla. I like Tesla. I got my DCF that I didn't laugh at. After battery day, first of all, how you have like favorite questions after you log in for security questions? Like Elon Musk has been one of those questions for me. Like, who's your childhood hero? Like since I think when I was in college, like this is 10 years ago now, right? I mean, you guys, I can't recommend it enough. If you're on the fence about the guy, go read his biography by Ashley Vance. And like, you'll see that it wasn't like some fluke, right? He like wanted to come to America. So he made it happen. And he made it happen by way of Canada. He wanted to then he started Zip2, then sold that, then did all this other stuff. So I love Tesla. I'm the biggest Tesla bull fan, all that stuff. I also like a 3-year Model X owner, and I'm going to be probably buying one. I'm on the fence on the Cybertruck. We'll see. But that said, I've been worried about the valuation because it looks very, very lofty, especially for a hardware on the face of it hardware manufacturer. And I got convinced by Battery Day. So Battery Day allowed me to change my discounted cash flow model, which I did live. If anybody of you have like 3 hours to spare on my channels, way back when I just live streamed me making a Tesla DCF. And that was the wrong DCF because I upgraded that post split and all this other stuff. And I think I have my valuation as low to mid 700 per share. But the problem, like right, is the value of Tesla is not in year 1. It's not in year 3. It's not even in year 5, maybe starting in year 5. If you believe Battery Day comes out and they're a full step function away in range and efficiency and cost. And so now if you assume they start selling as many cars in revenue as Toyota, I think that the company is very reasonably worth over $500, even if you don't believe in much else. Further than that, Now you have to believe in the value of autonomous driving. So the taxi network. I did this like back of the envelope math of, I can pull it up. Tesla model. ETF.
I have mine. Mine is going to be more bullish than yours.
More bullish than me for sure.
Yeah, while you pull it up, let me just give a shout out quickly to administrator. That's a cool name. $2. I already applied cream, but what the? Oh, Jesus. I hate getting trolled on comments. I have to. Jesus. Come on. Fuck. I feel like I'm in high school again. Come on. I almost read that shit. And Junebug says donkeys are better at self-driving than horses, which is probably very accurate. Can't argue there. And I think that's it for. Oh yeah. Yay! Buy the dip. Buy the dip. I agree. If you have patience. Patil, you're friends with Patil right now. He says great take on centralization aspects of other chains and BNB have changed in my mind a bit. Hey, that's a huge compliment.
Yeah.
You guys are good friends now.
Yeah. Think of it more like equity and not a. Yeah.
Okay. Crypto. So go ahead. You want to send me the link? I can pull it up.
No. I'm just like referring to it. So right. Okay. So my assumptions back of the envelope, and you probably built out your DCF probably bigger than mine now.
I'll show you my assumptions in this.
I basically have them getting to 100 billion in revenues, automotive total revenues in basically less than 5 years. And that would basically put it on par with like Toyota globally, right? That's a relatively aggressive assumption, but I'm saying that's on the backs of the battery day innovation that they're showing. They're at least 2 years ahead of the competition. Furthermore, I just have, honestly, I don't assume that much growth in energy generation and storage, but I think we'll leave that on optionality. I'll take that as an option. And then after that, right, that probably values the company at something like a $500 a share range ish. But then the question is in year 10, so like I do two separate tables, what's the value of consumer autonomous driving? And so that's robo-taxis. And what's the value of trucking autonomous driving? And so the value of consumer autonomous driving, I basically say, okay, so let's just take the US. 200 million citizens taking AI trips. Tesla takes a third of the market share. Number of AI trips per year. They'd make $2 per AI trip, which would be, a deep discount to a $10 Uber ride. What would revenue be? 50% EBITDA margins because it'd be like a software add-on. And then you would say the value of what's AI businesses EBITDA in 2035, 2030, I think probably 30, 35. And then you slap a 15 times multiple on that. Like, I think the AI business is worth over $20 billion on a value investor basis in 2030. So that's year 10, right? Yeah. And furthermore, the trucking market, I think that's you can slap on another $20 billion in year 10. And your assumptions might be much more bullish than that. I think those are conservative if they can crack that problem. And I also apply the percentage chance they get there. I just do a 25% chance they actually do it. They solve the self-driving nut. But if you say, I believe in them and it's a 75% chance, completely changes the game. And all that through my DCF using an 8% discount rate and with the cases, I think this is
how much did you get as the target price?
Yeah, like 750.
Yeah, I'm literally doubled on you.
Yeah, and I can see how you get there for sure. What's your discount rate?
10%, but I have much more bullish assumptions about. Okay, so these are mine, basically the underlying numbers. So it has no robotaxi at all in 2022. So I said robotaxi is 2024, and before 2024, this is 2022 numbers. Okay, so no robotaxis. This is just the energy business and the car business. So I got 126 billion in revenue in 2022. And if you just that's just before the DCF, just a 7 multiple gives you over 850. But again, you have to have a lot of faith for these numbers. A lot of faith. These are extremely bullish numbers. You have to believe these guys can over execute like crazy.
Wow.
Yeah, those are high numbers. I'm not going to argue, but I mean, it's a game of
Wait,
fate.
wait, so you think the biggest revenue driver
Oh
is
yeah,
Power
then
Pack? Oh,
yeah.
sorry, Mega Pack. What can you
Uh,
explain the thesis there?
Well, I made the whole video about it. I thought
Oh
you
yeah,
watched.
I think I missed that one. You make
Okay.
like over one a day. It's crazy.
Yeah. Well, basically, okay. So basically, um, well, let's keep it simple, right? So, um, let me remove this so we can have the screen to ourselves. Okay. So, if you take a look at the electricity market in the US alone, which is commercial and residential, right? You're talking about a massive market. This you're talking about over close to $500 billion market per year. It's a massive, massive market.
Yep.
Um, if they can take a crack at that market, the TAM for that market for that line of business is essentially exponentially bigger than the automotive US market. That's without even looking at global electricity and
Grid
global energy
replacement.
market. Yeah, exactly. So you have to believe for that model to work that a lot of people will phase out grid electricity into this whole new decentralized, deregulated sort of energy infrastructure, which means everything. They're supposed to do everything, which means production, storage, distribution through the decentralized network. You have to have a lot of faith,
They're
but
not selling that much now.
no. But look at the growth rate on power packs. Did you see the growth rate?
Yeah, I mean, my model's old, but I mean,
Dude,
they saw in 2019 that division saw a stagnant year.
no, no.
What was
Look,
the
they
reason?
had 85% growth year over year on power packs from 29. I think from 19 to 20.
Yeah, but the year before it was a pause, right?
Yeah, yeah. But this is like I mean, what have you done for me lately, right? So people seem to be buying more into it. Um, there's a lot of interesting videos on YouTube about how, like specifically in Austin, a lot of people who weren't on power packs actually had electricity through the whole time. And like, there's a lot of good buzz going around it. But the main question is, first of all, I think for Tesla, the biggest question would be, well, there's two questions. Second, most important question would be, can they hyper execute as far as creating a market for this, creating demand for this, and actually producing as much of it as I think they will. But I think the bigger question for Tesla is going to be, it's going to be a curveball that nobody is thinking about. It's going to be a regulatory question. You're starting to get into antitrust issues with automotive dominance and so much and energy dominance. You're starting to get into this world where you're going to have to start dealing with some antitrust issues. They're getting kind of massive. um, However, on the flip side of that, I mean, we're talking about the same antitrust that let fucking Facebook take over the world and Apple pretty much take over the world and take over multiple industries and let you know this. They let the telecom market consolidate into freaking two companies. I mean, I
Yeah.
mean, so I don't know. I mean, is antitrust? I mean, they kind of been sleeping. They've been.
Well, okay, so I have a question for you.
Mhm.
Do you assume that everyone gets a power pack uh, because they're going to have distributed solar? Or do you assume that everybody has a power pack and that replaces um, peak like grid systems?
Why do these concepts contradict themselves?
No, I
They're
know. I'm curious, like what it like. Do you think it's 50-50?
No, it's. I don't think solar from. Okay, the production side of it is far away. Even Nealon says that solar is not there yet. I mean, solar panels. Look, I'm not an engineer, but I understand production wise they're so far away. But as a storage distribution business, this thing is operational today. I mean, it's there. So, or at least could be. So I think that uh, it comes from the, hey, listen, you can make money off your fucking energy, into, hey, you can actually make your own energy. So I think the cards go, the dominoes fall, storage, distribution, production, because they have to make technological advances to produce that much energy from solar, because they're not there yet at all.
Yeah, no, I agree. I think I could probably put it in there. I have a like I'm trained to layer in a bunch of conservatism and margin of safety into these models. So I want to keep some optionality on the upside. So are you saying when you factor in, so you think, so by 2022, it looks like you think they're going to do 126
126
billion
yes
in revenue.
Yes,
it looked like on the backs of like where
the
we
energy
differ
business.
on the energy business.
Yes.
Okay. Well, we'll find out quick enough, right?
The question
months.
is, what is Tesla, right? What is Bitcoin? What is Tesla? I mean, if Tesla is an automotive company with a energy side hustle, they're not worth 1.5 trillion. I mean, it's a car company. But if I'm right, if Chamath is right, and if other people who think that, this is an opinion, right, that this is a energy production, storage and distribution company with the automotive side hustle, then it might be worth that. It's a discussion of faith. What do you believe?
So do you take into your valuation? Do you take into your valuation like the value of autonomous driving in year 10, like the terminal value?
No.
So you're keeping that as optionality, and I'm keeping the energy business as optionality. That's interesting.
Yes, and I almost don't have robotaxis. Robotaxi also is not in there. Not really, just a tiny bit of it. I have in the oldest model is $1 billion from robotaxis in the next 5 years.
10% discount rate. That makes a lot of sense that you can do that on Tesla if you think 126 billion in revenues in year
from energy
22.
Yes.
Have you looked at their is that all coming out of their Panasonic factory?
They have to start making their own stuff. They have
it's taking a few years to build these like gigantic gigafactories, right?
But they are building them. I mean, it's not Nikola. It's not like a bunch of tractors just going over the fucking sand. I mean, let's see.
By the way, I did a video about on my channel about Lucid, right?
Oh, what an interesting company.
Yeah, we could talk about that, but I'm saying all these companies, if you even believe their management commentary, those companies are trading at valuations the same or even higher than Tesla. So it's really hard for me to see, especially in this market and rising interest rate environment, why you wouldn't buy Tesla over the other ones. I just don't understand that.
Is Tesla is Tesla your main EV play?
Or I sold out Tesla last week.
You sold out?
Completely out last week.
While it was dipping?
No, right before. Well,
you have perfect timing then.
Thursday, so it was because it was like right at the start of the turn, and you can see all my trades at a couple cents.com.
Smart.
Basically, it started turning. The narrative, if you remember, on Thursday was interest rates, right? And I was like, bam, this is something we've been tracking to since December. I'm going to sell out of all the speculative high, like the way that you and I think about Tesla are actually kind of different. You can be right too, right? And I also think, like, just for everyone on the channel, it's not actually that binary of a thing, right? These people can be both right, and it could be a good investment and a bad investment. Depends on what are the years in the entry price and exit prices, right?
Yeah, exactly.
I believe Tesla is a $1.5 trillion company, like flat out. Let's just say it. Now, the question is it a $1.5 trillion company today, 5 years, 10 years, 20 years? And if it's anything over 7 years, I'd rather go invest in something else. Like there's a Peloton bull case that you and I agree on. I think is a little bit easier to get around, and you have to believe a lot less, right?
Peloton is such a misunderstood company. But hold on a second. So here's a good question from Rohit for you. Actually, you're the crypto guy. You want to take this one?
By the way, but what might be a catalyst for a meltdown in Bitcoin? I think Bitcoin sells off in the short term with all risk assets. So if you just look at what happened in March, everything sold off, right? Bitcoin sold off, gold sold off, right? We think of gold as an inflation hedge, and we're all worried about inflation. And guess what gold does over the past 2-3 weeks? Gold's down.
It's selling off.
Selling off. We are in a completely different world. What that effective funds rate chart that Tom showed earlier shows is we're at the end of the line. This is like the end of the line of a Keynesian policies that we've been running since early 1980s, right? So I think we're just in a different paradigm. So on risk off, it's a high beta, high risk asset class. So they're going to sell off more aggressively than even a Tesla, or more aggressively than anything. Although it's not right now versus Tesla. Tesla's down 35% from highs. And then during times of risk on, it's going to outshadow everything else. And it's going to keep doing this thing on its own cycle. It's got its own, guys, look up like 100 billion Bitcoin, his plan B on Twitter. Like he did the stock to flow model. I did a quick video on it on my channel. Right. And it's on the crypto guys think it's on the stock to flow model connected to the halving events, and will reach somewhere between 100,000 to 288,000 per Bitcoin this cycle. So that means by the end of 2022. I'm not, it seems to be really good on the back test, but again, the future's a new day. Tomorrow's a new day. Monday's a new day. But in Bitcoin's case, it trades 24/7. So I would say for the Bitcoin thing, it'll sell off in periods where all investors are scared. But it's also like, I mean, dude, I bought a Bitcoin at $18,000 back in 2017. And I told you, I also bought a Bitcoin at $300.
And it dipped like crazy after you bought it.
For how many years? 3+ years.
Yeah, it was.
I felt like an idiot. I felt like an idiot.
Single digits. I remember that.
I mean, you're talking about like, 6 figures going down to like low 5 figures, right? I mean, and then you just ignore it if you believe in it fundamentally.
Yeah.
That's what I think. But I think in a market-wide sell-off, that's going to sell off with growth stocks. And there might not be that many places to hide. You'll be best with value stocks, probably.
True.
And I always say on my channel, right? And you could have been right about Amazon and bought Amazon at $90 a share in 1999, and you wouldn't have made money until 2010.
For so long, yeah.
Along that time, Amazon was doubling. Yet you were still wrong because you were so wrong on your entry price, on your entry valuation. And that's what I think is happening on all of these like early SPAC stocks.
Justin, let's do a quick round since we got 5 minutes left. We can do this for another 3 hours. That's the problem.
Yeah, seriously.
We've been going offline for an hour. They don't know this shit. They think we're going on for an hour. This is going to be going on for 2.5 hours because we did a 5 minute that became an hour offline. Okay, I want to do a quick hitter round for you with some questions. So you're the guest. So let's take a few from the audience and then a few that I'm going to ask you, and I want to hear your opinion. Okay. So first, quick hitter. Try to keep the answer to a minute. What about Chinese electric vehicle companies considering a different market scenario and different economy? Shouldn't this give them some margin compared to the US market?
Yes, but the valuation on NIO is too high. So Tesla is a legitimate player in China, so you're going to get Chinese exposure. So I'd rather own Tesla. The last write-up I did at acouplescents.com was comparing NIO and Tesla, and NIO was higher valued. It's the valuation on its fundamentals, even on future fundamentals, was much higher than Tesla's. So I'd rather own Tesla, and you get all the optionality of like self-driving, self-trucking, and battery storage.
Good answer. Now I have a tough one for you. So, Chamath, like or dislike?
Well,
he's a binary character. A lot of people love him. A lot of people dislike. As you can see, this woman just gave you $10 to ask this question. We're not going to repeat the question, but like or dislike?
Not
as a human being.
So I actually think she's more perceptive than the majority of the internet. Hi, Natalie. Nice to see you if you're still on. I think he is what I would characterize as an early, what is he? He's an early Facebook employee that headed up the sales team. So what he is, like, if you even do like a disc chart, or like, he's a well-talking person. Like, I'm an Excel nerd, so I don't talk as gooder as he does. But like, he's a high dreamer, lots of conversations with other people, probably low on the detail, et cetera, et cetera. And he bragged that all of his SPACs are up. Yeah, all of your SPACs are up because you have a cult of personality and everything's trading at a Chamath premium. I think at the end of the day, he thinks he's Sequoia Capital, but he's actually not. Right? I disagree.
Ooh.
I don't think. Right. First of all, there's what I've learned doing my tech CFO stuff on top of this is there's only 24 hours a day. I don't care if you're a billionaire or you're like the poorest person in the world. You have the same amount of time. And so how does he go super deep to truly understand a full team understands at Sequoia Capital on a VC level, Open Door, SoFi, Virgin Galactic, like all these things. How does he just quite possibly can't, right? He just knows the spark notes and it's a gut feel for him. And I agree with some of them and I disagree with others. I like SoFi. I think it's going to be a new wave type of banking system for millennials and Gen Z and onward, even though they're centralized. I disagree. Virgin Galactic is harder for me to really get my head around. It's basically one of those zero cash flows. Like, do you believe that they start doing trips in the next 5 to 10 years? I mean, if so, like I would rather wait for SpaceX. And then thirdly, they're talking about Open Door. Like if you truly know, like if Chamath really did the analysis like I did on my channel about return on equity, like ROE, like metrics on Open Door, like you're talking about a company that needs to shell out $500,000 of cash for 1% to 2% margins, right? So someone has to, an equity investor has to put up 500,000 to get 1,000, like to get, I don't know, like $5,000, right? And so what they have to do is they have to rely on leverage to make that business on an ROE basis at all, like iBuying. And so like we've made a lot of money on the Roke Big Board at a couple cents.com on Zillow because it's just a better play. And they also have iBuying and they're also the homepage of real estate. So sometimes there's no right or wrong answers. They're just better answers than others.
And there's Clover. I mean, we haven't talked about Clover.
Oh, Clover. Yeah. So it's funny. I can't talk about Clover. I work with them in my day job.
But I've added Chamath to the screen for you on the corner.
Ooh. High five. I don't hate the guy.
No. But this is the type of video I hate not investing into a soundboard. I wanted to do the sound, the sound, effect for shots fired, like and I couldn't do it. I don't have the soundboard. Shit.
But like he called Bitcoin really early. Like I think he's a very smart guy. I just disagree with a couple of the SPACs.
Okay, next, before we get sued, Chamath, don't sue us. We love you.
Honestly, yeah, we love you. Like
we love you.
I love you. You're like he's a cult of personality for sure.
I like him a lot. I'm a fan of his. But on my show, dude, I had a guy on my show. His name is Trey Taylor. He runs, like, he's a legit, smart, rich guy with an education, and he runs a family office with a lot of money. And he's a Tesla bear, and there's a cryptocurrency bear, and he didn't believe that there's going to be a crash. And we had such a great discussion. Because I come from a culture when we don't have echo chambers like you have in America, so I can have a discussion like this and not get triggered because I love Chamath. But that's I think. No issues. Anyways, next, Kevin Kern, 5 CHF. Is this Swiss? I don't know. I don't know what CHF is. Thank you for that, Kevin. Tesla shopping tour on Monday. Keep up the great work. Awesome content. Is that a question?
Yeah, I think it's an agree or disagree. I think
agree or disagree then.
What is Tesla at today?
Let me pull it up. 1 second. Boom, boom, boom. Oh, I pulled up the wrong thing. Sorry.
I mean, that's a scarier chart.
Yeah. Ooh. We need the Kramer sound effects, like the train crashing.
Yeah. Bye. I've been watching that guy since I was
We can't invest in the soundboard on this channel. We need more super chats.
So I think it's not wrong, but there are better shopping. They're better clothes to buy on Monday.
Okay, good answer. Okay, now questions for me since we don't have any more super chats. Okay, non-super chat question by Bill Kong. He has such a cool name. I gotta bring him up. Bill, you have an amazing name. Why Monday Tesla today was an entry day? Well, you disagree with this, obviously, right? At this price.
I mean, I don't hate Tesla at this price, but I also am salivating over Peloton at 100.
Yeah.
Right. So we're at a buffet here, right? Like
there's too much. There's too much.
Tesla's like the I don't know what's the food you like, man, but you don't love, like a good food. Like Tesla's like the slice of the pizza on the but then there's like some prime rib over
Okay,
there,
I'll
and I
give you
only got
another
so much
example.
space.
Listen, since we're both nerds and we love video games, dude, I'm so old. I've been playing Atari in the 80s, bro. Imagine how old I'm.
Yeah, you
I'm,
predate me a little bit.
dude, motherfucker, I'm old. Anyways, so imagine you remember when you were 12 and you would walk into a video game store back in the day when they mattered, right? And everything was on sale. Literally everything is on sale. And you're salivating over all this. This is what's going on right now. And you're looking, okay, so World of Warcraft is only 10% down, but we got fucking Call of Duty, the new one, 50% off. Well, I'm gonna get the Call of Duty, even though it's both great games. But I get what you're saying about Peloton. Um, quick question for you. Daniel Heinen asked, "What do you think about Snapchat stock?"
Oh, I like Snapchat. Unfortunately, Snap as a product has run away from me. I used to use it a lot. Maybe it's just me maturing. It's run away from me for inherently understanding why it's getting a resurgence. They're trading at 40 times forward, maybe 35 times forward gross profit, growing at 45+% a year. Seems about fairly priced on relative val. But it's also like, what does relative val mean in a time where discount rates are going up aggressively?
Yeah.
So like in terms of like, I really like Twitter. So if you're going to buy Snapchat, go look at Twitter. I like Twitter, but I think Snapchat's not a bad one. It's going to whip around with the market, and it's like on the buffet table. It's like string beans. Like I like it. It's not the best thing on the buffet table.
Again, you go into food, and I'm staying with video games.
Yeah, but the thing is with food, I say food because you can load up your plate with just one of the foods, right? But with video games, the reason why I'm using video game. Oh, I know you like Palantir a ton. We should
Okay,
probably.
I'll start. Subscribe now to Justin's channel, not to mine. I'm gonna pull up Justin's channel on this screen while we talk. Make sure you go and subscribe to his channel because we're about to go off. So this is Justin's channel. Make sure while I speak about Palantir, you go and subscribe. I even put the logo for you on the screen. Subscribe now. Okay, so check this out. So Justin and I completely probably disagree about where Palantir is headed, but that's just because we think differently. Justin is a risk-averse Wall Street analyst who've been trained to think like a bot, and I'm a free-thinking person. So here's here's my opinion about Palantir.
Shots fired.
Like we need this. Can we get a soundboard, please? If we had a producer, I would ask him one, but I don't have one. I can pretend I have a producer. Hey, John. Anyways, listen. So, Palantir. So Peter Thiel wrote in his book years ago that his game plan is to create a monopoly in a brand new market that he's going to create. And I think to put it short, because we're doing quick hitters, right? This is exactly what it did with Palantir. You might argue, well, Palantir is in this market or that market. Motherfucker, they have their whole market. What the fuck is their market? Predicting the fucking future? I mean, that's not what's the total addressable market of that? And it's completely industry agnostic. They're across 16 different industries with the little shitty clients they have now. I mean, they're in healthcare. They're advising mining companies. What they did here is they took a marathon approach. They spent 2 decades making no money, using government funds, unlimited funds, to create products for defense, which are completely non-economical. And now, after 20 years, they're taking this and they're applying it to commercial sector with literally no competitors. I mean, who the fuck is going to compete with them? You can argue, well, the PE ratio, that motherfucker, who gives a shit? It doesn't matter. The PE ratio, they're not, they were even profitable. Like, if you take away the ESOP stuff, which was 1.2 billion, which is actually smart, giving your employees actual options, investing in your employees. So if you take away the 1.2 billion, they're actually profitable, which is, if you look at the adjusted net, they're profitable. So, I mean, why? Dude, I bought so much Palantir today. I mean, dude, I'm making a video. I'm producing a video right after the stream. There's going to be a train and a Cathy Wood conductor. It's going to be crazy, bro. So it's a Wall Street best level meme, bro. It's going to Mars.
I don't disagree with you at all with anything you said.
Let's get it.
I don't disagree with anything you said.
Okay, but
I'm at the buffet. I'm at the buffet table, and you see prime rib. steak. You see the swordfish, but I think of it as like it's mashed potatoes. Like
Yeah.
it looks great, but it's also trading at such a valuation that it's trading at 34 times forward gross profit.
Yo,
And I look
at their growth though.
Okay, so no, even their growth, they say they're going to grow at over 30% a year.
Oh, they're bullshitting.
So yeah, I mean, then you can play the expectations game of
Dude,
management
their
projections.
5-year estimation is garbage. That's just there so they can beat it.
Yeah, okay. Yeah, I agree. As you
If
and
you
I,
look
as
at
finance
Alex
people,
Karp and Peter Thiel, that's exactly what they love to do. They love setting these fucking low hanging fruits so they can say, "Oh, we fucked you."
no, I completely agree. I just want to point you to the fact that there are other B2B higher growth B2B enterprise software businesses that are growing faster than them at I'm just trying to look for one. I could probably, if you gave me 10 more minutes, I could find probably a better example.
You know what?
But,
let's leave it as the hook.
But like CrowdStrike, ticker CRWD, is trading at 42 times forward gross profit, and they're growing at 80% a year with similar margin profile, similar really high B2B sticky long-term recurring revenues, similar contribution margins. My whole thing with Palantir, like, first of all, I like Palantir.
Did you see their demo day, Justin?
Yeah, no, I like Palantir. I did not like it at 40. I'll tell you that. I actually
hold on. If you buy into the fact that it's a completely scalable software business,
yeah,
you don't
so is
like
CrowdStrike.
Yeah, but look at their stuff they're doing with the companies they're working with.
Yeah, I mean, but look at the SolarWinds hack. Now CrowdStrike is table stakes. So I'm not saying I like Palantir a lot. I think this thing's going to compound over time. I actually really like it. I haven't bought it yet because one, I did my last analysis on Palantir at $40 a share, and I said it was overvalued. And yeah, I think I still stand by that because Palantir at $40 a share was like 50 times forward gross profit, over 50 times forward gross profit, growing at maybe 35%
argument against them. Everybody says that. I understand that. That makes sense.
So at $23 a share, starting to get kind of interesting for sure. But it's also like, do you think that this is going to move around with general tech stocks like we talked about earlier in the stream? Probably.
I'm putting this on the screen to support your argument, by the way.
Oh yeah. Okay. So yeah, people like CrowdStrike too. Yeah, I'm saying
no. Look at the number. No, not the comments. I'm putting this on. This is like the growth numbers from Seeking Alpha. So I like Seeking Alpha because of this. They aggregate the financials into this really easy way to present stuff. Are you seeing this?
Yep.
It's the growth is phenomenal
with CrowdStrike. Yeah.
Yeah, that's CrowdStrike.
And they're similar, and I'm comparing them apples to apples because they're similar B2B businesses.
Yeah.
Right. And they have secular trends that are going to just absolutely kill it in their favor. I mean, right. There's a thing to hold of like, could you and I, Tom, make a little ETF of our favorite B2B enterprise?
Why not?
SaaS companies. And we'll just buy both.
Dude, all we got to do, we just got to register. We get some qualified investors.
Do you have like 3 million in legal fees that we can have?
Dude, we have online presence. Our viewers will pay for it.
Yeah, I hope so. If you guys want exposure to that, like I always get scared because lawyers are so expensive. As you know.
Lawyers are the scum of the earth, and I say this as a lawyer. It's not like a fat person can make fun of fat people, a Jewish person about Jewish people. I'm a lawyer. I'm actually licensed I took the New York State bar and I passed somehow. God knows how. I was partying in the day between. It's a 2-day test. So the day between, I was partying so hard I didn't. Never mind. Long story short. However, as a lawyer, I'm going to tell you, lawyers are the scum of the earth. Every single one of them. I haven't met a decent one yet. It's just I'm a lawyer. I'm like Tim Watley. I converted. I only did it for the jokes. You remember Watley? How he converted for the jokes?
No, I don't. I'm missing that reference.
Okay, Bryan Cranston used to play the dentist in Seinfeld. Tim Watley.
Oh, yeah.
And he's like telling these racist jokes to Jerry, and Jerry's like, "You can't say that." And Tim Watley, "Well, I'm Jewish now. I converted, so I can tell the jokes."
Oh, yeah.
Anyways,
I found one more example for you.
okay, give me
If
one
you're
more.
okay with it.
Yeah.
So ServiceNow is growing at 30% a year over year,
Oh, another good company. I like
and
it. I like him.
30% year over year, trading at 2/3 the valuation
I like
of
ServiceNow a lot.
of Palantir. So I'm not
But
disagreeing with
they're in
you.
a completely different business. I mean,
Yeah, I agree. I completely
it's a
agree.
Salesforce.
But a dollar to me is a dollar to me. Like a dollar of EBITDA to me is a dollar of EBITDA.
Okay, but dude,
Or
you're
free
talking-
cash flow. This is free
okay.
cash flow to equity.
Are we really comparing a Salesforce kind of a CRM company, whatever they are?
No, they're not CRM. They're like enterprise, like backbone stuff.
Okay, but dude, I love ServiceNow. I love Salesforce as well. I love all these B2B companies, but none of them have that insane innovation factor like Palantir. I mean, none of them can do what Palantir can do as far as, we're going to take a shit ton of your data, and we're literally going to tell you what you need to do better as far as option A or option B to make
I
more
agree.
money.
I'm not
This-
saying buy these instead. I'm saying, have you considered them? I'm
No,
like answering it with a question. And so you're
ServiceNow
really answering the question, right?
is one of my favorites, and CrowdStrike is a phenomenal company as well. Haven't considered it as well. Looking at these numbers, I'm like, what the fuck? It's really good numbers, and mm, I think I can see it here. But, so it's a good margin, good margins, good growth.
I mean, that's why I compare them, because they're all
Yeah.
B2B, long-term contract,
Yeah.
monthly recurring revenue, like core, sticky, around 75 to 80% contribution and gross margin businesses.
Yeah.
Like,
By the way, shout out
I
to
understand Palantir may take over the world. And if they do, I think Palantir is a great buy. And so I'm going to go look at it if it hits 20.
But
Like,
okay, so your approach is, I'm much more of a risk taker. I'm much closer to Kathy Wood than you are.
probably, yeah.
Okay, so did you see what she did with Palantir in the past 2 weeks?
Yeah, she's been buying.
You know how much stock she bought since February 18th?
What's the percentage now?
Now it's from RK, it's 1.12% of RK.
Oh, that's big for her, yeah.
Yes, Tesla is 10% in that fund. It's 10 million shares of Palantir in that fund, but she also has 5 million shares in ArcW. Now, just mind you that in October 2020, she had 0 shares of Palantir.
Yeah, no, I agree.
And the 10 million she bought for RK, she bought for February 18th, then February 25th, then March 3rd. So literally from the past 2 weeks.
I mean, we all might be on the same page. I'm not trying to argue. Like, I actually think, right, I did my video on Palantir, or maybe on my newsletter write up when it was at close to $40 a share, and she didn't buy back then, but she's buying in the 20s.
But now it's a good price.
Yeah, so I have to do more research on it.
Yeah.
I mean, but she also owns around the same as like Twitter. She's got a lot of like Tencent, DocuSign. I think the DocuSign thing is not. I disagree with her on the DocuSign thing.
So this is RK. Can you see it, or is it too small?
Yeah, I'm looking at the same thing.
So this is Palantir right here. So yeah, I was right. 1.12%. I know my Kathy Wood stuff, bro. I'm a stalker. I know.
I like her too. She's awesome.
Dude, how stalkerish is that I knew the percentage to the like 1.12%? I didn't say over percent. I mean, it's scary, uncomfortable, cringy, but it is what it is. Listen, we have a record number of viewers. I hate to end it, but we have to end it. 2,200 people in the stream right now. Shout out to everybody. Shout out to LaBelle for that last question of the day. Invest into Virgin Wines. I don't know that stock at all. I'm not familiar with it, but thank you for the suggestion. LaBelle is a moderator in the chat, and she's in every stream I do. So thank you for that. We really appreciate it. Thank you for the support. So Justin, we gotta sign off. It's been, including the offline, we've been at this for 3 hours. Guys, I'm gonna put Justin's stuff for you to go and subscribe right now. He has a criminally undersubscribed channel for the quality. Make sure you go
Thank you.
subscribe to Justin. This is his Twitter. Follow him on Twitter. Go subscribe to his channel right now. And you're gonna get so much value. I watch it. I saw, I quoted you from your streams. So you see I'm watching your stuff.
Yeah, for sure.
So this has been a pleasure. I'm sure we can go for part two easy. There's so much more to talk about.
I will have you be on whenever you need me, Tom. I just
Good.
appreciate you having me on.
No, it's my pleasure. Let's schedule. I have my assistant schedule a part two with you. We'll bring you back on, and we'll do the clickbaity thumbnail and everything with the fire and Kramer and the rocket ships and like.
Yeah.
We'll
I'm
do the
learning the
clickbait.
game.
Yeah. You have to. By the way, so my friend Andrew, who and we'll sign off with this. So I've been getting a lot of people complaining, "Oh, your thumbnails are clickbaity now." Well, so algorithm doesn't promote videos if you don't have drama in the thumbnail or the title. It's nobody's gonna watch value
didn't know that.
content. So trust me. However, here's the thing. So my friend Andrew, who I think he was one of the founders of one of the biggest MCNs back in the day. He told me when people complain about your thumbnail being too clickbaity, they're really saying, well, why don't you change something for my preferences and change up your free content and make less money and grow less on YouTube, so your product, which you give to me for free, fits better to my emotional needs. So the person that says that, is he a friend or is he an enemy? Is he a supporter or is he a hater? So he's like, at the end of the day, if the content is good, I expect my viewers and my subscribers to just say, okay, he's just doing this for the algorithm. That stupid face. But if it bothers you that much, I mean, it is what it is.
I had to learn that. I had to learn.
You don't do that though. You don't do that at all.
I
and
try.
appreciate it.
Yeah, because I don't even have time to like take photos of myself. I need to get a photographer to like come over and just like tell me what faces to make.
You need the Home Alone face. It's really important. Like,
Yeah,
that's
I call that the Graham Stephan face.
yeah, yeah. Well, he's laughing all the way to
All the
growth.
way to the bank.
I mean, at the end of the day, if you make good content and you want to reach as much as audience as you can, you have to get clicks. You're not gonna get clicks if the algorithm isn't showing your thumbnails to more people. And the way the algorithm is built, it's just basically it's a numbers game. But
Yeah.
hey, I hope people understand that, and it is what it is. Listen, Justin, we'll have you for part two. I had a blast speaking to you and learning from you as well. This was phenomenal. Thank you so much. Make sure you go subscribe to Justin. And peace. We're signing off. Later, boys and girls.